Welcome back to Explain the Charts, everyone. Today, August 5th, 2025, we're tackling the highly volatile USDJPY pair, which has been making headlines. Recent news indicates significant downward pressure, primarily driven by weak U.S. jobs data, which has fueled expectations for a September Federal Reserve rate cut. Adding to this, the Bank of Japan has signaled a tighter policy stance, indicating potential future rate hikes, further bolstering the yen. This divergence in monetary policy, coupled with a return of safe haven demand, explains why we've seen USDJPY drop below the critical 150.00 level. As of this morning, live rates reported are around 147.524, a notable recovery from recent lows, but still reflecting bearish sentiment. Now, let's turn our attention to the one-day chart to get a broader perspective on these trends. Looking at the period from late July into early August, we can clearly see the impact of the news. Specifically, zoom in on the sharp decline from July 31st and August 1st, where the price dropped from highs near 150.87 to 147.36. This dramatic move perfectly aligns with the reports of weak U.S. job data and increased Fed rate cut bets, which hit the market around this time. The 150.00 psychological level has now firmly transitioned from potential support to a significant resistance point. We can observe strong selling pressure as the pair failed to sustain levels above 150.00, confirming the bearish sentiment that pushed it lower. Currently, the daily candle for August 4th closed at 146.79, and while the live price is slightly higher, this remains a critical support zone to watch. Shifting to the 1-hour chart gives us a more granular view of the recent price action. Examining the hourly candles from July 16th to July 21st, we see periods of consolidation and short-term volatility. Notice the attempts at recovery often met with resistance, preventing any sustained upward momentum. For instance, minor pullbacks around 148.80 in mid-July suggest immediate resistance levels forming. The overall structure here reinforces the prevailing bearish sentiment from the daily chart, with lower highs and lower lows consistently being printed. Volume analysis on this time frame can also reveal shifts in momentum. Higher volumes on bearish candles would confirm strong selling interest. Now, let's look at the 15-minute chart for the most immediate price movements from late July 31st to August 4th. This time frame highlights the rapid sell-off that occurred at the beginning of August, specifically around the 1754051220000 timestamp. You can see several large bearish candles with significant volume spikes, indicating institutional selling or a strong market reaction to breaking news. After the initial crash, the pair entered a period of tight consolidation and slight bounces, as seen between 147.20 and 147.80. These short-term bounces, however, lacked follow-through, failing to reclaim prior resistance levels and showing the underlying weakness. Low volume during these consolidation phases suggests a lack of strong buying conviction. For short-term traders, identifying these microtrends and failed breakout attempts is crucial for precise entry and exit points. Bringing it all together, let's recap the critical price levels and potential outlook for USDJPY. The 150.00 level stands as strong resistance, unlikely to be broken short-term unless there's a significant hawkish shift from the Fed. Immediate resistance is now around 147.80 to 148.00, which has been tested and rejected on the smaller timeframes. Key support to watch is the 146.00 area, as mentioned in the news, which could be the next major target if the current bearish momentum continues. A short-term bounce towards 147.50 to 147.70 is possible, but likely to be met with selling pressure, offering potential shorting opportunities. We are currently bearish on USDJPY in the short to medium term, with a 70% likelihood of continued downside towards 146.00 and potentially lower. given the strong fundamental catalysts. This would be reinforced by further weak U.S. economic data or more aggressive comments from the Bank of Japan. A bullish reversal, with a likelihood of 20%, would require unexpected hawkish statements from the Fed or a sudden dovish pivot by the BOJ, pushing the pair back above 148.00. A neutral, sideways consolidation phase around the 147.00 to 147.50 range is also possible if market participants await fresh catalysts, but this has a lower 10% chance. Always keep an eye on upcoming U.S. ISM data, fresh Fed commentary, and any new signals from the BOJ, as these will dictate the next major moves. Remember to manage your risk carefully and adapt your strategy as new information becomes available in this dynamic market.